Hello and welcome to today's edition of Charting the Markets with me, Sean Murison, Senior Market Analyst at IG South Africa. On today's economic calendar, we have had the Royal Bank of Australia leaving lending rates unchanged already. And this afternoon, we will look to that US jobs openings data, JOLTS openings data, and that's out early afternoon. Looking at some charts, starting off with the US dollar basket, the US dollar index. Despite what we thought might be happening, that longer-term trend is still down, still very relevant. So keeping a short bias to trades on that US dollar basket has been beneficial. We have a short-term range here between levels 101.45 and 103.05. And at the moment, we do see the price testing that support. We get a break, we see a nice close below, then we'll be looking at 100.50 as the next downside target from the move. If we don't get the break, and we do see a reversal of support, we wouldn't look long the dollar index just yet. We'd be waiting to see where that rebound takes us, looking for that rebound to end, some type of bearish reversal for short entry. That's until such time as we see a break above 105.30. And this 200-day simple moving averages blue line here. So we're keeping a short bias to trades as we have over the previous weeks, unless we see a strong rebound take us above those levels. The short-term picture looks like we could be having a break of support. Might confirm today. If it does, 100.50 becomes that initial target. Inversely, if you look at the euro dollar, the trend alignment is with the moving averages on what we call proper order. We have that 20, the red line, above the 50, which is above the 200. So we have a short to medium term resumption of the uptrend in line with that longer term uptrend that is still in place. So over the last little weeks, we've been looking at breaks of levels. We've been looking still to keep a long bias trades. We have now reached our 1.930 resistance target. We start closing above there. We are looking towards 1.1035. Now, if you have been fortunate enough to catch this long, you might want to be looking at trailing your stop loss to a close below a one-day low, because we are still looking. We are still laboring in overbought territory as well. But keeping a long bias to trades, in the event we do have a pullback, we'd be waiting for that pullback to end with some type of bullish reversal closer to one of our support levels. 1.0720 would be one of them, and we'd still be looking for long entry. We're not looking at shorting the euro dollar just yet. We're respecting those trends that are in play right now. Now, similarly, if we look at cable, pound versus the US dollar, we've had quite a strong move to the upside. We had this longer term trend that was up as the price was trading above that 200-day simple moving average. We had a bit of a falling wedge consolidation here. We've been looking at the breakouts and trading the levels as we get the breaks. Last one being above that 1.216 north mark. And it has followed expectation and traded through our targets at 1.2440, that ultimate target that we were looking at. Now, as we trade above that, if the traders are long, might want to start trading those stop losses between a one-day low. We are in overbought territory, and if we do get a pullback, then we'll be looking the same. We're looking for that pullback to end, looking for a bullish reversal to find long entry in line with the predominant trend, which is still up at this point in time. 1.2635 becomes our next upside target from the move as we trade through this 1.2440 resistance level. Now, moving away from some currencies and moving towards some indices right now, starting with the NASDAQ 100. A little while ago, we talked about this golden cross. This golden cross hasn't disappointed. That's the 50-period moving average, moving above that 200-day simple moving average. It has paid to be looking to buy pullbacks on that NASDAQ, and then certainly where the momentum is in terms of the US indices at this point in time. When we see a bit of sector rotation, or certainly as fear around the banking sector drives move towards growth stocks or some tech. Not without its risks, of course, but we're looking technically at this point in time. We've got that longer-term trend that is up. We've got that bullish bias. We've had a break of our 12,900 level. We've moved towards the 13,190 target. And now we're looking for a close above that before we start targeting 13,730. So traders along might consider having a stop loss below 1 or 2 day low. At the moment now, 13,032. It does pay to keep a tight stop as we start to move into overbought territory. Same principle applies. If we have a pullback from overbought territory, wouldn't be looking at shorting that move. but wait to see where that price settles. And provided that we still considered a longer term uptrend, we'd be looking for long entry on any type of bullish reversal. So waiting for a breakout, or in the event of a pullback, waiting for that pullback to end with a bullish price reversal. S&P 500 also following suit. We had a break of trend line. We had a break of that 4,005 last time we spoke, which was last week Thursday, and our target was 4,080 initially. We've traded through that now, and so we start looking at this high at 4,195. So things are moving quite aggressively in the right direction. Finding entry into the market right now when we have run quite hard is quite difficult, but certainly we have had the breakout and we are moving to it. If you are long already, then you might consider having a stop loss between that 1 or 2 day low, depending on your threshold for risk at current levels. Ideally, for new entrants, we'd like to see a bit of a pullback from overbought territory. And again, looking for that pullback to end, some type of bullish reversal before finding a long entry. Moving over to Europe now. This reversal we saw has yielded some gains, and we are now testing that 15,715 mark, our previous resistance target. It is still proving to be resistance, seeing the price testing it 1, maybe 2 times, and now it's testing it currently. We need to break above that. We need to see a close above that before we can unlock gains back towards that 16,300. And like the other indices, we are sitting in overbought territory right now. Now, we're still respecting that longer term uptrend, so we are not looking at picking tops in the market, but if we do have a correction or a pullback, we'd be looking at that as an opportunity to join that longer term uptrend. When we look at pullbacks, firstly, that trend is up. A pullback can become a correction, and only if that correction gets deep and we start taking out major lows do we consider a trend reversal, and we're still far from that at this point in time. FTSE 100. Very similar picture. You have this almost W-type shape, which is a double bottom or ABC reversal. It was marking the end of this move lower. As a function of that, we had the breakout, and now we've tested the 7,700 level. So that is finding resistance there right now. We do think that this longer-term uptrend is not really there. We think this is more of a sideways type price environment. And so if we did actually get it, we're having an intraday reversal now, a bit of a shooting star. And if this was followed through with a bearish price candle next year, we might consider short entry on that, moving towards support there at 7,560. Then in range-bound type environments, we start looking to trade between the levels. So the alternate there is if we don't get a reversal, we're looking for a breakout, close above, targeting 7,870. The breakout makes it a little bit more difficult in terms of your risk-reward assumptions. If you get the reversal, though, you could look at having a stop loss on a close above that 7,700 mark. But we'll watch to see what happens with today and tomorrow's follow-through on the FTSE 100. Looking at commodities now, and been a lot of movement in oil markets this week. It's after OPEC surprisingly cut more than what the market was expecting, over 1 million barrels of supply. Now that's caused this gap up, taken us above our resistance. Our view is still what it was previously, though, that the longer term trend is down, despite what we're seeing in this rally, probably some short squeeze in the market right now. We are still backing that longer term downtrend, provided that this 88.70 level remains resistance. Doesn't mean that we should be short just yet. We need to see this rally end, some type of bearish price reversal closer towards 87 or 88, or even from current, and that was supported by an overbought signal. So I'd like to see this overbought indicator stochastic moving back below that 80, accompanied with a price reversing course, just ticking back from where it is before looking for short entry. The alternate there is if we do break above resistance, we'd wait for a rally and then wait for the first pullback before looking for long entry. But we're still far away from looking for long entry on Brent crude just yet. Gold uptrend is still in place, and we've consolidating around those highs, which I usually find fairly bullish indication. We've got this triangle shaped consolidation now, and that's considered a continuation pattern in technical analysis terms, meaning that this is basically a pause in the upward trend before that trend is continued. But nonetheless, preferred way to trade it is to wait for a breakout, wait for confirmation. Ideally, you can see a break to the upside, So close above this resistance level before targeting $2,010 a barrel. And if we can get through that, then you start looking at channel resistance conservatively sitting at $2,050 per barrel. Now, if we don't get the upside breakout and you do get a downside breakout, wouldn't be looking at shorting gold just yet because of that longer term trend that is still considered up. So in that situation, we wait for weakness to play out, look for a bullish reversal at one of our low levels of support for long entry. But first, we'd wait for it to play out in the event of a downside breakout. But we're going to wait for the breakout. We're still going to keep a long bias to trades on spot gold at this point in time. And only if we start taking on major lows, it's quite a long way away, would we consider short trades on gold. Copper it's also produced a type of breakout, less than before. But we do have this long term trend that is up, consolidation, a wedge or a flag type consolidation. Then we've got a breakout to the upside, and now a bit of a pullback from that breakout. Ideally, we'd like to see a bit more of momentum here. This could be moving into a broader sideways consolidation. I think it's still fairly positive. The copper price is still doing quite well relative to where it was at the beginning of the year. And certainly, China can be a kicker towards the price of copper at this point in time. But we've had an upside breakout. I'd like to see a bit of a stronger close before targeting the next levels there, about $9,185, possibly $9,400 per metric ton. Now, if you're not trading copper, it's worthwhile looking at underlying shares that do stuff like Glencore, Rio Tinto, BHP Group, and companies like that. Right, that's all the charts from me. Sean Murison, Senior Market Analyst at IG South Africa. Do watch out for that US jobs opening data later this afternoon. And thanks for watching.